Hello, welcome to the Mine to Money Online Connect Virtual Mining Conference. So just a little bit of housekeeping before we get started. If anybody has any questions during this panel discussion, please submit them in the Q&A panel on the platform. With that, let's get started. M&A activity in the mining sector has been heating up, and today we have a fantastic panel to talk about trends in the marketplace and what investors can expect in 2022. I'm Neils Christensen. I'm an editor with KITCO News, and I'll be moderating this discussion. Joining me today is Richard Lloyd, Chief Executive Officer at Minexia, Pim Kalisvaart, Portfolio. I apologize, Pim, I probably didn't pronounce it right. Kalisvaart at Hawke's Point Capital, and Jason Chang, Managing Director and CEO of EMR Capital. Gentlemen, thank you very much for joining me today.
Thank you, Niels.
So lots to talk about today. 2021 was a big year for M&A activity. We had Agnico and its merger of equals with Kirkland Lake. We had Newcrest taking over Pretium Resources. Kinross Gold bought out Great Bear Resources. These were significant deals. To start off, let's just go around the table. What does M&A activity in 2022 look like? Jason, let's start with you.
I think 2022 will be a continuation of the last couple of years. It's going to get more active as you get more appetite from the capital markets to go into real assets, into gold. I mean, we are seeing that both from the private capital side as well as the public capital side. We floated our copper operations less than a year ago, good reception, and it traded well. And you've seen lots of capital raisings. And so there is demand and there's pressure on management to look for the next best thing. There's some organic growth, but I think everyone's looking at a lot of inorganic growth as well. And that's going to drive that. I think you're going to see miners, the majors, the diversifieds, the juniors, all looking for diversification from a geographic perspective, from a commodity perspective. Everyone wants to get, an entree into energy transition. We've seen that, battery minerals. So I think it'll be very exciting, Neil, for mining sector and lots to come in our view. And so we all have to be prudent, measured. And I think the mining sector has been very prudent and very measured actually so far as I can see. So that's been terrific. So 2022 a year of action, Neil.
Pim, what are your thoughts on activity for this year?
Yeah, I echo many of those, and I'd add that the activity that we've seen so far has changed the chessboard in that that mid-cap sector is getting eliminated by virtue of its own success, and that creates a vacuum to be filled by those at the lower end of the spectrum that then have the space to grow in. They don't have the assets necessarily to do that, so the logical way for them to go about it is to mop up assets themselves. So I think the seeds have been sown. Jason also mentioned correctly that the mining sector has been very prudent. One could argue it's been too prudent. If you look at the amount of capital, they've listened almost too well to the comments and the criticisms back in the day, and they've taken that on board. But the pendulum has arguably swung too much in that money was returned to shareholders. And not enough, nearly enough was invested into growth, organic growth being projects and exploration, and that results into the situation right now. So if companies do look at wanting to grow their business for the reasons that Jason so clearly outlined, they're not going to find much options in their own portfolio. Hands back to the chessboard of M&A and looking who's on there and who can they go after to solve that quicker than they could possibly with developing their own assets. So it seems that a lot of stars here are aligning for 2022 and the period beyond to be a continuation of that M&A activity that we've seen throughout the sector on the mid-cap and the smaller level, and possibly also on the bigger boys who might see that one doesn't get penalized for doing these deals and might dare to do this again. Who knows?
Rich, you get the final word on this then.
Let's see what else there is to add. But no, I agree with what Pim's saying there. I think, I like his chessboard analogy, the sort of the pawns turning into the bishops and the knights and then up to the kings and the queens. Yes, there is a gap there. I think a lot more of the smaller juniors are going to get mopped up, or, they get to go and combine perhaps and become that mid-tier. But I think there is, they would expect a premium. I think some of those larger deals you first mentioned were very, low premium or zero premium. And as a shareholder of the target, I'd be a bit miffed. But perhaps we can go on and discuss that further. But I think 2022, we're still doing this online. There is travel happening, but I'm helping get a project financed at the moment, and the financiers, consultants just couldn't get on the ground to see it. So these projects have stalled, and in the same token, I think the executives of various companies haven't been able to meet, and it's very hard to negotiate or drum out a deal over Zoom or Teams or whatever medium you want to use. You do have to meet people, you do have to see the assets, otherwise, you're just leaping. It's a leap of faith, isn't it? But maybe that's why some of those bigger companies, the Kirkland Lakes of this world and eco, they all know each other and they're in the same sort of geographic zone. Maybe that's one reason why that happened, and an Aussie taking out a Canadian or vice versa didn't happen at the major scale. I don't know.
Definitely a lot to unpack there. Thanks for this helicopter view of the sector. I want to sort of move on a little bit. Pim mentioned this, and I've talked about peak gold before, and how we need the need for resources, and I'm sort of wondering, is it peak resources? Pim mentioned this, that there hasn't been a lot of investment in the ground. Is M&A really the only avenue for replacing production? Whether it's gold, copper, lithium, whatever. It feels like sort of we've fallen behind on exploration, especially among the big guys. So what avenues do they have? Rich, I'll let you go first.
It was an ex-field geologist come banker. I don't know which was the worst, actually, but I think the exploration continues. The big boys don't have the big exploration teams anymore. When they mop up 200 graduates every year from Rio, Rio Tinto would mop up all the grads from, certainly in the UK here, Royal School of Mines, Nottingham and all the rest of it. That's not happening. They are mopping up the junior mining companies in order to replace ounces. Let's leave it in a gold scenario, perhaps. So that again will drive. That'll drive the M&A side. I think there's a hell of a lot of juniors looking out for, the lithiums, the rare earth metals, the phosphates. These are all the sort of newer commodities. And I think the big boys mentality is, well, we'll just wait and let them spend the money. They've got all the knowledge. There's some extremely good geologists in these smaller companies, and they are finding some good assets, and let them kick the stones over and do all that work. And then, the executives can then get the premium on a buyer.
Pim, what are your thoughts? Can the big boys, the seniors, flip a switch and get their exploration back up and running? Or is this the time for juniors to really shine and show the assets that they have?
I think it's a bit of both. And let me pick up on one of the things that doesn't necessarily tie into the M&A discussions, but that I'm seeing out there and that I'm very excited about. I used to set up and run a small venture business in Xstrata, and we were the only, for what I knew, the only venture business, and it was hard yards. And innovation, which was one of the mandates, was something that was hard to come by. And finding opportunities in innovation was difficult, near impossible. No one was touching it. What I do see now is lots of innovation in the mining space, both to catch up on its EV credentials and on its green credentials, and recognizing that we're living in a different world. But also I see lots of innovation being sponsored by venture businesses that are now popping up in the Rios and the BHPs of the world, and similarly in other big businesses that are investing in new processing technology. And I think that is another angle that's exciting, and that's going to supplement and needs to supplement exploration. We've all seen the curves of the grades going down over the decades. And the only way we're going to combat that is by getting better at extracting the minerals out of these lower grade rocks. So I think innovation is to play a huge role. I mean, we all know what SXEW did for copper, and there's nothing's to say that we couldn't do the same. And in the lithium space, we only just started, right? Direct extraction is a whole new thing that people are grappling with. We're throwing money at it, and smart minds, and we might see something completely different. So in those new metals, there's room for excitement. I note that a spec de-specced into a very speculative new potential mineral source. Now we can all opine on how likely that is. But nonetheless, real capital has gone into a very innovative idea of seabed mining. And again, if we had this discussion 5-10 years ago, we would have pretty unanimous in saying that would never have happened. And yet here we are. So I think it's being supplemented, and I'm quite excited about some of the things I see. I hope they succeed, because that element of the sector needs some early wins to become just as common and sustainable as exploration and M&A is. It should be part of our vocabulary, just in the same way the other topics are part of our vocabulary.
Yeah, and they're reworking all the dumps as well. In South Africa,
exactly.
It's tin, it's gold, it's, you name it, and that new technology is enabling, and that brings up a bit of a cleanup as well, doesn't it?
Yeah. So it's got fringe benefits. It's, like I said, I really hope they get some early wins, because it needs to become part of our toolkit on a common basis, as opposed to something we think of after the fact, or only happens in certain peak times.
Jason, where do you stand on buying ounces versus digging ounces?
Yeah, look, I'm with Pim. I think it's going to be a combination of both. I think you're going to see a lot of that. You're going to see greenfields exploration, trending upwards for sure. I mean, it's already happening, right? I mean, Newmont announced their 22 budget, Neils, of what, 300 million. So that's okay. It's slight uptake from the year before, but that's going to trend upwards. And I think I call it there's been a structural shift in the market acknowledgement and sentiment of the importance of raw materials. That's terrific. Long time coming. You've seen the upgrade in all the sort of, prices of commodities over the last few years, right? Gold 1,300 to 1,800. You see base metals, you see the bulks, you see precious, right? All I think getting to ultimately what we would call, truer valuation, and that's not going to stop, right? I mean, the fact is now, I think the world has acknowledged that an energy transition requires all these commodities, right? And hence, that's going to drive, for sure, it's already started, right? It started last 18 months, call it. And therefore, it will translate to more dollars in greenfields exploration, innovation, absolutely. Technology, we need to see more of that. And we're going to see some of that this year. And it's very exciting stuff in mining. I mean, where have they been, right? I mean, you get these technology companies, right, trading at some crazy multiples, and here we are, real assets trading at far lower. But that's all changing, which is terrific. Like I said, we floated our copper operations at 5 times EV/EBITDA was, not enough. But it was a good start. We were able to raise, about $170 million US, which is, we're going to fund the organic exploration deals, right? So at 29 metals, that's what they're doing. So you need a bit of that, but I think you're going to have a lot of pressure to find inorganic as well, because you can't do it in one method. It's not one size fits all. So you need that, you need technology. I think that's what I think we are very confident of seeing in the mining sector, which is terrific. So lots of innovation, lots of AI, lots of new equipment, lots of different mining methodologies, processing, which is terrific. I think finally with the valuation that we're seeing, I think it's going to give everyone the momentum to invest, the courage to invest, right? And I think shareholders will be backing it. So I think someone talked about, returning capital as a bit, that should be yesterday's thing, going forward. And I do agree. I think that the mining houses are now going to respond, I think, to that demand. So terrific.
Okay, so then I think this is a question that's on everybody's mind. It's actually a question that we got from the audience. Where do we focus? Where is the M&A activity going to be? Is it going to be, in the seniors? Is it going to be in the mid tiers, or is it going to be juniors? Pim, what are you looking at? Are the senior producers going to be buying up the juniors, or are the mid tiers going to try to elevate themselves? What's the activity look like?
Yeah, I don't have a crystal ball, but we're a batting man. I put a bit on both squares because like I mentioned early on, I do see that mid-tier being emptied out by virtue of the mergers that they've undertaken, and that's a trend both in Canada that we spoke about, but the same we see here in Australia, right? You see Northern Star and Saracen, combining and competing on the big level, but leaving a void in their wake, and as a result of which there's a space for someone there to fill, and people are aggressively looking at how they can build their business. It's again a single mine companies, will always struggle, so they will quickly want to diversify and add another mine or another operation to it, or become logical takeover targets, whereby premiums are easily paid because you can just look at the obvious synergies of removing the overheads, and it's justified. So I think you're going to see activity on all of those fronts, particularly now that people feel a bit more confident about the gold price environment and the risks. I think for other commodities, I would say I'd say boards will probably be a little bit more nervous about what's there. If I told you that there's a war going on, that we are at peak inflation, we're still at the back end of COVID, all of those, two of those combined, let alone all three of them combined, would be enough to spell out that a recession might be coming. So someone might, a board will think long and hard about whether that environment and the uncertainty that can come with that environment is necessarily the right time. But as these effects wash through and people get more confidence, I think you'll see it in the non-gold space pending out as well. But yeah, I see action potential on all fronts. But one thing we've learned over 2021 and early 2022, it's been a time of momentous big changes and kind of 2-3 standard deviation away type changes that have had big impact. So it could change on a dime as well if something happens tomorrow.
Jason, what sectors do you like? What sectors are ripe for M&A?
Look, I would say across the board, Niels, you've got the base metals, you've got the energy transition metals. That's probably going to see a lot of action. We've seen a lot of action. There's much more to come, right? It's still a bit of a fairly young, I suppose, segment that's received a bit more focus more recently. It's been around for a long time, but it's received a lot more focus because of the move towards net zero. And so, we've passed the point of no return for sure. You've got hundreds of governments signing up to the accord and legislation. So there's no question, there's no turning back. So I think we're going to see a lot of action because everyone's scrambling for resources there, Niels. Not many producing mines yet, right? In whether it's lithium or whether it's cobalt or whatever, and they're all in, you know, concentrated jurisdictions, right? So I think that is one segment that's going to see activity, but you know, you're going to see a lot, as Pim and Richard said, in gold. You're going to see in base metals. You're seeing in the bulks, right? You're seeing in met coal. Well, there's a lot of stuff going on in met coal. You still need steel, and there's no substitute for met coal. Not yet, not for the next 20 years, according to the experts. So it's, you know, we're going to see some great technology emerge for sure, because you can't solve it by simply exploration alone. I think that's Pim's point, which is absolutely right. So I think we're going to see an era of, you know, the scramble for resources, and more efficient processing, synergies, regional consolidations, right? That's going to be top of mind. So we own a gold mine in Queensland. Our ambition is to be the largest gold miner in Queensland. Not very large, you know, a couple of 100,000 ounces, maybe 300,000 ounces. But you know, Queensland, right? Very prolific in all those wonderful metals, and you know, we're going to go very hard at looking for new things because there's lots there. So if you can add resources, you can take your time. I think investors are going to be more patient over the next 10, 20 years. So that, I think we're going to see a lot of that too. That is looking for that for that ground. And the other thing I wanted to mention is, you know, I think Richard touched on this, is there's a lot of private capital looking for exposure to real assets from around the world. We manage a lot of US capital, their pension, long-term capital. They're trying to figure out what's the best way to do it. So we are one of the channels, and there'll be other ways. So I think we're going to see the emergence or the increasing role of private capital into the real asset space as well.
Richard, your thoughts on what sectors we should be looking at in mining for that, you know, that are prime M&A targets?
Yeah, I come from a gold background, so gold always drops to my head straight away. But yeah, gold, copper, and the energy metals, as Jason said. But I think I agree wholeheartedly. I've been waiting for a bunch of the sort of smaller, let's say, junior mining and exploration groups in West Africa to sort of get together and do a regional consolidation. I think due to the unfortunate situation we've got in Eastern Europe, Russia, Ukraine, I think people are going to start looking. You know, the UK government announced this morning that, you know, they're going to revamp and relook at the nuclear power. It's kind of getting your own house in order now. And I think countries and larger corporates are going to say, right, I need to really focus on where I'm operating. And I think leading on to that is, I think, one of the main drivers for the M&A now, and I think where Pim was sort of alluding to as well, is as these companies look at targets, one of the biggest hurdles now and one of the biggest considerations is the whole ESG side of things. Now, a small company that's operating properly, they've got it all set up and it's ready to go. A merger with a company that hasn't quite got that, you know, it's going to help them. There'll be synergies at the board level, etc. Or a larger group could bring even better ideas, or even the small, you know, the small target could actually help some of the bigger groups. You know, we saw, you know, bulldozing a Aboriginal cave thing, you know, in paintings and all the rest of it in Australia. It wasn't the cleverest thing to do, and it was a huge company that's supposed to know what they're doing. But I think that ESG side is going to be a huge factor. A lot of my investors, and we're very, very careful on what we select for the platform, that, you know, are these companies operating correctly? And it's not just the tick boxing anymore. It is, you know, really engaging with communities and planning that out from the day one, not when someone asks the question. I think that's one of the big that'll be one of the big drivers as well. And that whole sector, you know, the consultancy side of that sector is booming because everyone needs that advice and make sure they get it all done correctly.
That's actually a really interesting point. I was saving this for later in the discussion, but you guys have keep bringing it up, ESG. How does that impact M&A? And Rich, like you said, sometimes the big guys don't get it right. So is it like is M&A the M&A the answer, or is it that we have to have smaller companies for smaller footprints? Is M&A sort of long term extinct dinosaur in that, like how do we manage ESG when you are a Rio Tinto or Newmont has a decent track record, but I'm just sort of wondering, it's harder to do that when you are a senior company. Rich, let's start with you on this, and then go around the room.
Yeah, I guess with a big corporation, you've got so many more people, and ESG isn't a tailings dam failure. It's one person doing something stupid potentially. One employee, turning a car over or saying something inappropriate, or these big groups have got a lot more people, and the chain of command is stretched. And I guess M&A deals will fail because targets haven't had their ESG side of things sorted out, or the due diligence just hasn't quite ticked it. They haven't got their heads around some of the community issues, and that leads to the sort of governmental risk. What's the Chilean government going to do next? What's your water abstraction license like? What are the relationships with the local community? What's your footprint you're going to leave behind? Are you actually going to leave the place in a better condition with some good schooling, some educated, then perhaps geologists and engineers that can continue to develop the region or the area, and as you step away, and what are your tailings facilities looking like when you've gone, etc. And that's, people are looking so much further down the line now, and maybe the smaller companies aren't capable of getting all that done. They haven't got enough money, so that'll almost force them into a selling sort of idea or mind frame, but they need the help of others to get these projects off and running.
Pim, what are your thoughts? How does ESG impact M&A? Can I throw any more acronyms into that sentence? I don't know.
What a good thing is it is, and I think I'd like to think that there's never bad intentions, not to recognize that we as an industry have some way to go, but I think the intentions at the top level are right, and we're seeing it in, just to add a little bit of color, because most of the thunder has already been stolen by Richard, but to anecdotally add some color, we're seeing it in processes. When a major company is selling an asset, previously they would do so to the highest bidder and couldn't care less about any other considerations, and now you're actually seeing they're thinking very carefully about who is taking over these assets, because it's taking over the legacy. It's got impact on their social license to operate in country, even though they're not operating it anymore. So I think it becomes much more front and center, as it should, in people's mind, and it becomes part of the key considerations, and rightfully it trumps certain considerations both on the buy side and like I said, on the sell side. I think that's a good thing. I think we all need to raise our game. The challenge we have, as every other industry has, is that we don't have a agreed system to benchmark, nor do we have an independent auditor or auditing system. But we're all trying and we're working it out. And I'd like to think that in a couple of years, we're getting much closer to having agreed a framework or whatever the case may be. And crucially, one that's relevant. We can adopt frameworks from other industries, but counting CO2 emissions isn't necessarily giving you, in spirit of what you're looking for, the right answer. So there's a lot more that that we need to cover and unpick and adjust in order to make those frameworks relevant to us as an industry. But there's very many clever minds focusing on that, and I think that clarity on that front and decision on some form of a platform and framework would aid people, so that these decisions can be taken into account. People also know what they're working towards, so that it can facilitate further M&A as opposed to potentially stand in the way of it.
Jason, you said that we are at a point of no return when it comes to this ESG. How does this impact companies growing?
Yeah, ESG has been important in the mining sector for some time and will continue to be very, very important. I actually think the mining sector has done not too badly with a few notable exceptions. So the mining sector has been, in many ways a leader, I think, in ESG, in health and safety. You look at COVID, I mean, just to digress, Neils, the mining sector actually has performed pretty well. So similar with ESG, I mean, ESG is both a cost and potential and opportunity. I mean, if we looked at an asset we want to buy and we think about how can we improve the ESG because it adds value to the asset. But I think similarly, to Richard's point, it can be fatal to the deal too, right? And we've bought an asset from Rio Tinto. We know it's absolutely right. I think Pim's made the right point that the majors are taking it seriously. They interview all the buyers and make sure you have the ability, track record, experience, and integrity to do what you say you're going to do. So I think that's definitely a very integral part of the mining sector. So I think both the cost and opportunity. I mean, it is a cost. I mean, I think to Pim's point and Richard's point, to report on some of this stuff cost money, right? So at Matabe, our gold mine in Indonesia, we had 60 full-time people. Now Indonesia, different standards. We had more people than required, but we had 60 people in the community relations, right? Our mine was in the middle of the jungle. We had 7 directly affected villages. 70% of our employees were from those 7 villages, right? And we built a hospital, we built a mosque, we had schools, we had training programs. And because it's very simple, I think the mining sector understands that, unless the community around you flourish, right, you don't have the social license to do what you're going to do. So that was a very big part of the program. And I agree that really, end of the day, ESG is a leadership issue, right? It's not about the size of the entity, right? You've got the right leadership, the right culture. ESG is going to be top of mind. I mean, just like OH&S. So it's an opportunity, Niels, I think, but clearly it's going to increase the cost. I mean, you then talk about carbon emissions, and you've got the US now saying you've got to report on all this stuff, right? Scope 3. So let's try that, right? That's going to take some time, but that alone is going to consume a few, full-time equivalents, right? Just working that out, and lots of advisors. So that's coming our way. But I think definitely that's important. But it's not just about practicing the ESG, but also reporting on it is very key. Right?
Yeah, we can have a completely different discussion on ESG and what's required. I agree with you. I do think that the mining sector is sort of become a leader in this, mostly because they've had the most people don't think highly of ripping resources out of the ground and tailings and stuff like that. But they have been a leader. It is a fascinating conversation, but I wanted to sort of move on a little bit. And, Richard brought this up. And how does the geopolitical landscape affect M&A activity going forward? I've talked to a lot of people, they're questioning globalization now. How does this, how do you have a global company if globalization is waning and in its twilight years? Jason, I'd like to get your thoughts on this first.
Yeah, absolutely top of mind here. Prima facie, as an investor as well as an operator, we really need to focus on investment grade jurisdictions, what we call tier one mining jurisdictions, right? That's to be distinguished from, OECD countries, for example, right? So number one, we are really looking for consistency of regime. End of the day. Having said that, not many countries in that basket, including Australia, for example. The laws do keep changing. And so that's going to be top of mind. Very, very interesting. And look, for us, we're really looking at tier one mining jurisdictions right now. I call Indonesia a tier one mining jurisdiction, right? No history of nationalization, very consistent. You can get access to information, you can get rulings, right? We've operated very well. We operated a major gold mine, Matabe, 400,000 ounces when we exited a couple of years ago. So I call that, we like Chile, but overnight we've taken a pause on our Chilean initiatives just to think about what's going on and be watchful. And of course, we've seen lots of stuff going on in PNG and Kyrgyzstan and Mali conflicts and Burkina conflicts. So I think we're going to be very careful because we've seen what can happen, right? You can lose time, a lot of time, and time can be everything. So I think, Niels, I think that's going to be top of mind for all miners, I think, going forward and being watchful. On the other hand, what we said just about 20 minutes ago about the demand and the scramble for resources forces everyone, including the majors, to look to jurisdictions they may not have considered even 18 months ago. I mean, if you look at the majors where they've been in the last 12, 18 months, I mean, that tells an incredible story in my mind. And so, you've got a major saying, well, we're going to look at all these jurisdictions, and I'm pretty sure you go back not too far, they said exactly opposite, right? So I think that will turn people's mind, but I think for the better, they're going to try and find ways, I think, to work with governments to improve the governance in those regimes. So the mining sector, I see as going for a very important role in working with governments to improve transparency, governance, ESG in those countries. So that's a good thing. It will unlock a lot of supply that otherwise would be cut off.
So a comment that we got from one listener, Kinross, they sold their Russian assets. And this speaks to the geopolitical and all of the how does this impact M&A? Do we see is it just tier one jurisdictions that are going to see the activity to reduce this risk? Rich, how does the geopolitical landscape affect M&A going forward?
Yeah, I think it will. I think one driver, and people may disagree, I would see some of the majors. Remember when South 32 got spun out? I think you might see that I think that the days, I think Pim was saying the days of the global diversified mining company are not, they're pretty short. I think what you're going to see, that BHP South 32 decision was on sort of pillars of commodity versus geographical, but I wonder if companies are now saying, right, I'm going to spin out my Asian assets and my Latin American assets into different companies, because we've seen what Chile have done recently, and I know the funds have only certain baskets for what they call emerging markets. Now, what's your definition of an emerging market, or somewhere that's sort of geopolitically tougher to get deals done? And they would rather do deals in jurisdictions they know and understand, and where the goalposts aren't moved too regularly. Australia, Canada, North America, Latin America to some extent. But look at Australia; they tried to introduce that iron ore tax but they went into battle against the big boys and lost. And who'd have thought that was a political risk, that Australia were going to go and do that? Nobody buys political risk insurance for Australia. You think it's only places, that are a bit more further flung, that there has been geopolitical change in the past, or potentially even nationalisation. Of course, once it starts happening, that insurance isn't available anymore. It's a bit of a horse bolting stable door scenario. So I think you'll see. I think some splits will happen. I think you'll see some more South 32s appear, but I think possibly because of geographical locations of assets as opposed to the commodity pillar.
Pim, you get the final word on this. How does the shifting geopolitical landscape impact M&A?
Yeah, it's accelerating a potential trend, and there I acknowledge there's two forces. At the one hand side, I hear that BHP, might reconsider going into the DRC, a statement I thought I wouldn't hear. On the other side, I think if the recent geopolitical situations in kind of global forces and hangover from COVID has taught us anything, is that people are now looking to onshore everything, or at least have their raw material supplies from call it friendly countries. So I'm not quite sure how these two, because I do see them as competing forces, will span out. I think there's some very obvious fallouts, and King was just one of them, and Cetera, and like there's some very obvious dropouts that we're seeing now. But how that's panning out on beyond that, I'm not entirely sure. And I think there's some tough discussions supposedly going on in the boardrooms about how these companies want to go from here, because with the extractive industry, we can't pick up our factory and put it somewhere else, and you often spend an awful lot of money before you see a single dollar return, let alone be in the black. So that whole notion puts it again at a risk. And I don't think I'll make a statement that anyone would agree with if I say that if people had the choice between any country in Latin America and or West Africa versus in Australia or North America, I think they'll go for Australia and North America any day. It's what is needed before they start actively thinking about stepping away. And we see that in Australia, right? We've seen a very interesting trend that I haven't seen in a very long time, in that, they have all the Pacific Islands at their doorstep, yet they went all the way to North America to buy Pogo, to buy Atlantic Nickel, and to buy hard gold. And something that we haven't seen Australian companies do in recent years, and yet they felt that despite the riches at their shores, their investment dollars were safer in Canada and North America. Go figure. So that's where they came out when they did this equation, and that's not to say that others won't come out at the same way. So watch the space. I don't know where it's going to fall out, but there's strong competing forces here.
I think we have time for one more question. It's a theme that has popped up back in 2020. Barrick made a zero premium bid for Newmont. We saw last year Agnico's merger of equals with Kirkland. Is this going to be a theme? This low premium to no premium bid in M&A? Is this what we can expect? And I ask this because a lot of investors, they get into the mining sector because they, especially the juniors, they want that big payout. Somebody's going to pay money for their ounces. So is this a trend that we have to worry about? Is the idea of paydays gone. Rich, what are your thoughts on this? And we are running out of time, so let's be a little bit brief here.
Yep, no problem. I wonder if there's a thesis in this. I'm sure, you know, I sit on a board of a couple of small mining companies, and we have a fiduciary obligation to our shareholders to get maximum value and behave properly and all the rest of it. I think the smaller juniors would expect a premium, and I don't know if there's a study or a graph that shows, you know, when a medium-sized company is taking out a smaller one, the premium is averaging out at X. But I think when the Agnicos and the Kirklands get together, has that been done in a friendly manner in a boardroom, and it's more of a merger of equals? If I was a Kirkland Lake shareholder and I got zero premium, or very, very low premium, I'd be a bit annoyed, to be honest. I think they should fight for that equation to be correct. I think the investors are rightly annoyed, but I think the smaller you go down, I think the bigger the premium could be. Maybe there's a PhD out there for that.
Pim, gold, we saw gold push above 2,000. How does this impact the premium bids? Will this drive up the price of junior assets?
Intuitively, the higher the underlying commodity price, the higher the share price one can justify, assuming that, and this is way more important than where the gold price is at any given day, there is stability. One needs to have a sense of stability in order to recommend making a takeover bid or indeed accepting one. And when things are hugely volatile and they take 2,000 one day and 1,900 the next, it's very difficult for board to either accept the takeover or to recommend the management team to go ahead and make an acquisition. So rather than focusing on absolute numbers, because there's an obvious link, if the higher the price, the higher the underlying share price, no one disputes that. But I think we're focusing at the wrong thing if we're looking at underlying prices. We need stability for people to project and make their projections and come to a recommendation that they can stand behind. And I think we see that in certain commodities and not necessarily in others. And we're living in a pretty volatile world, so I'm not necessarily sure all the ingredients are there for the type of stability that is needed.
Jason, where do you fall on the scale of premium bids?
Look, Niels, I think it's all situation specific, right? There might be reasons why shareholders are happy with the merger and they want to get on with it. But if you think about what we talked about, and if you accept there's been a true structural shift in sentiment, in valuation, in acknowledgement of the role of raw materials, I would say it would be the exception where you see those sorts of deals going forward, because I think the trajectory, I think, is very clear for price of raw materials. That doesn't mean there's no fantastic value opportunities to invest, by the way, because that's what we do. We keep looking for opportunities where there's a dislocation. There'll still be dislocations, but I think there's no question that the arrow is going northeasterly upwards, right? There's no other way. Now, I completely accept one thing's for sure. Volatility has exploded, right? Just look at some of those prices we've seen last 12 months, right? And so you're going to see lots more volatility, but if you smooth the graph, there's no question. So therefore, I think it's the exception where you see those sorts of deals. But it's all very situation specific.
Mm-hmm. I wasn't even able to get through my entire list of questions, but we have run out of time. I just wanted to thank you very much for your fantastic comments, your insights, and I get the general sense that yes, M&A activity is going to thrive in 2022 and beyond, given all the uncertainties in the marketplace and in the global economy. So thank you very much for your time, gentlemen, and thank you for watching this panel discussion on Minds of Money Online Connect. Stay tuned for more coverage from the conference.
Thanks, Niels. Thanks, guys.
Thank you, Niels. Thanks.